Hello, this is Brian Shannon from AlphaTrends.net. Today is Monday, the 16th of June, 2008, and the market's closed. The S&P 500 did make it up today to about, what was the high in there, 136.93. We were expecting the potential for resistance up near 137, 137 and a half, and you can see the market fell just short of that level. The market has been rising the last 3 days here, and we've seen the volume trail off the last 3 days as well. So that gives us reason for concern that the market has rallied up to a prior level of important support on diminishing volume while we have the market below a declining 10, 20, 50, and 200-day moving average. I think that you've got to really be on high alert for a reversal back lower right now. When we look at the 10-minute time frame, we don't see evidence of that yet. However, on Friday, what we had noticed was that the market had made this higher high and a higher low, followed by another higher high late in the day. So today we had some follow through on the upside. It got up to that level where we were looking for, again, that potential for resistance, and now it looks like there are, in fact, sellers there. It doesn't mean it can't push up through that level, but the odds don't favor it with a declining 50-day moving average, so you have to be alert to the very real possibility that this market could get going back down to the downside again. It's not technically evident yet, but I think the first clue will be breaking below support that we've recently seen just under 136. I think breaking below 136 is going to get a lot of longs nervous, and that's the potential where this market could continue lower. So you've got to be very careful here. Friday I said it looked like the worst was behind us for this leg lower, and we had one more day up so far. Let's see what happens. Today the market did hold where we were expecting to see some support at 135.5. Today's low was 135.46, so it was right near there, and now we're keying off this important level of prior support at 137.37.5. So got to be on high alert again. That's the theme here today, I think. The Russell 2000 was up 53 cents. 51 cents rather, made it up to 73.83. We were looking for, since the market got above that $73 level, and the 5-day moving average, it cleared that 5-day moving average. We're looking for the market to potentially continue higher up towards either the conjunction of the 10 and 20-day moving average up to the 200-day moving average. I'd said the range where there was likely to be supply released to this market was $73.80 to $74.15. Today we made it up to just over 74. Again, there's nothing here on this time frame on this market either that indicates the sellers are back in control, but we are at a critical area, and we've got the real possibility based on this diminishing volume and the fact that it's below this key level right in here, or toying with that key level near 74. We've got the real possibility that the sellers could very easily take back control of this market quickly, and another test of the 72 level I think could lead to a more severe sell-off. So you've got to be very careful in here right now. The Qs, NASDAQ 100 was up 43 cents, and I posted on the blog earlier today that the expected level where we would see supply released to this market was around the $49 level, and that's in fact right up to where we made it. You could make the case that maybe the market's going to make an inverted head and shoulders pattern. That's something to be aware of. This market is, that is the NASDAQ 100 is clearly still the strongest. We've got a rising 50-day moving average. It's possible that this market could fail here, but maybe it's going to build a right shoulder. I think that really probably down near about 48.25 or so, breaking below that level would be the area where I would think that it could lead to a bigger sell-off, and something that's going to get a lot more people's attention. So actually, let me take that back. Not 48, but actually, probably this low, because the 48 level was such an important level for a period of time there that we want to give it room down to there and then a break below. Otherwise, we've got this market, failed a breakout on the upside here about a week and a half ago, and then a failed breakdown in here. That will, that's confusing a lot of people, and I think that that's going to make this market less vulnerable to a sell-off and maybe more of a sideways correction. Clearly, the weaker market in here from the way I look at things, is the S&P 500, and then the Russell 2000, followed by the Nasdaq. Nasdaq is the strongest. You had research in motion today, getting ready to look like it's breaking out to all-time highs once again here. It's if it closed here, it would be a weekly closing high, and we're very close to the all-time closing highs right from back here in early May. Something I wanted to point out: a couple stocks that I had mentioned in a video yesterday, and really this is how I like to look at them. I had mentioned Beacon Power as a potential long trade, and the stock was up nicely today. The way I like to play these gaps is, first of all, the stock was moving higher. It gapped up here to about 182, and you could have bought it there, or you could be more precise and wait for this daily VWAP to get taken out. What I did was I purchased it right here at $1.84. I sold some initially at 191, and I'm still holding part of the position because it looks good. But that's the way I like to play a stock like that, one that gaps higher. Another stock that I got involved in that I'd mentioned over the weekend was CBAK, that's China Back Battery. And what happened in here was we also had a gap higher, and the stock looks like it's poised to continue higher. But China Back Battery, you see it gapped way up here. You don't want to chase these stocks. What you want to do is let that initial sell-off run its course. And you can see here that what happened was that the sellers, although the stock gapped higher, the sellers had control clearly for the first 2 hours of the day. As that VWAP was declining, it kept declining in here, built a little level of support. Support right in here at about 509, and then broke past this, these highs right in here. And I purchased the stock at 514. I'm still holding some of it, in fact, most of it. But that's the way you want to. That's the way I like to play a stock when there's a gap. And I'll have more of that type of information available exclusively in the bonus tab for the people who purchase the book.